Good morning. Thank you for joining us here today as we present the multifamily market update. I'm Travis Montgomery, the Director of Marketing here for the Multifamily Investment Advisors team, where we're backed by Keller Williams Commercial and Keller Williams One Chicago. We're going to begin this webinar by actually going over some information in regards to the capital market, which Drew will be providing us with today.
Good afternoon, everyone. My name is Drew Heitzman. I'm going to start off by just showing everyone what the 10-year Treasury yield chart is looking like. And as you can see, it's been quite volatile over the last month, touching as high as 1.74, and it currently sits about 6-7 basis points under that at 1.66 right now. An upcoming catalyst in terms of the rate is going to be actually, I'm going to go back and say yesterday during a 60 Minutes interview, Fed Chairman Jerome Powell let people know that it's highly unlikely the Fed will rise interest rates in the upcoming year. But with that said, there's an upcoming Treasury auction this year in which the Fed's going to be offering $271 billion of new debt. And based off of that, so if there's going to be low demand in that Treasury auction, that's going to result in potentially higher 10-year Treasury yields. So that's something to look out for. And there is also going to be an upcoming report on inflation. So keep the lookout for that, as those will be two major indicators of where 10-year interest rates will be heading over the next month and year ahead.
Thanks, Drew, for going over that information today. Jason, can you please share with us some information in regards to some upcoming developments?
Yeah, absolutely. Thanks, Travis. Good afternoon, everyone. Just wanted a couple quick updates. I know we've been seeing a lot of different articles and information coming out about the Biden administration infrastructure plan. And a couple of the proposals within that plan are pretty interesting. One of those being out of the $2 trillion, there's about 213 billion that is proposed to be dedicated to affordable housing, and then on top of affordable housing issues, and then on top of that, it's about 621 billion. Dollars that's proposed to kind of go towards improvements to roads, bridges, railways, airports, and things of that nature, which kind of brings me to some of the projects taking place here in Chicago. And one of the things that we're seeing start to gain traction a little bit last year in 2020 was the Red Line extension, and that project is obviously picking up again, and we're seeing a lot of information come out about that. But currently, the Red Line stops around 95th Street, and they're proposing they're extending that through 130th Street. And the cool thing about that extension is that our Invest Southwest program that we've been mentioning and sharing information about, they've identified a key corridor within that extension area as well, right on 111th and Michigan Ave, which they've identified as a priority corridor to do some redevelopment and adaptive reuse projects as well. So that's kind of the update for today, Travis. Just wanted to touch base on the Red Line extension and that Invest Southwest corridor a little bit further south.
Definitely some good information there, Jason. If anyone's actually listening in on the live or in the webinar, please feel free to actually send any questions, or if you would like some additional information in regards to those developments, please feel free to leave your information in the chat bubble. And next, we're going to have Tony actually to go over some information in regards to the real estate and the commercial market.
Awesome. Thanks for passing the ball, Travis. I'm going to see if I can figure out how to share my screen here. And is my screen showing up?
Yes.
What do you see?
Stabilized availability rate.
Awesome. Yeah, so we've been tracking apartments, the availability, the absorption, and what we're finding in the apartment market is that still we have been seeing some rebound in this going into the second quarter over 2020. There was a bunch of hiccups in the downtown submarket as far as vacancy rates were the last two quarters of 2020 the highest on record. We have seen those vacancies begin to fill in the downtown market. However, they are still big concessions being made, but they were offering concessions into the third and fourth quarters of 2020, and it wasn't working. But now going into the first quarter of 2021, we are seeing the market begin to stabilize a little bit in the urban core, but still, we as far as vacancy rates, you can see this is the CoStar rating. They rate 4 and 5 star apartments would be the Class A office, Class A apartments downtown, and the 1 star would be South and West Side vintage 120-year-old construction buildings. You can see the vacancy rates in the 1 and 2 star is lower than the Class B and the Class A apartments, which would be the 3 star, the 4 and 5 star. We've been seeing that absorption by the net absorption rate has been higher vacancies in the garden style. The garden style communities have been doing really well, followed by the mid-rise buildings, which are the buildings that you see most of the 30 unit, 24, 12 unit buildings you see scattered around the city. The high rise have had their absorption rates have remained consistent. Suburban versus city vacancy. City vacancy as a whole has been a lot higher than suburban vacancy. And again, the suburban has more the garden style, 2-level townhome style communities sitting on acres versus the tower buildings. Apartment supply and demand. Another thing that's been interesting is housing in Illinois and the Chicago area. We're looking at a 2-month supply. And you keep hearing from residential realtors saying, hey, I went to an open house and there's 15 people waiting in line to go into the property. Or I went to tour a property, there's 15 or 20 people waiting to get into the property, or they're getting beat out. They're offering above list price. They're offering cash. They're offering short due diligence periods and still losing out on deals. It's because the housing supply is low. And also another thing that's low is the amount of distressed sales on the market. Banks are working these deals out. The courts aren't really open for foreclosures. And there's a lot of stimulus money and assistance on the side to help people through this challenging time. So we're seeing the number of distressed sales that we've been seeing. And that shows that where we're used to seeing 4 or 5 months worth of supply on the market, we're only seeing 1 or 2 months worth of supply. We're down 44% as far as supply, but as far as sales prices, existing home sales and sales prices, we've seen a sharp spike, and that's continuing. That trend is continuing. And I'm speaking to more and more apartment owners that are saying, hey, my tenant is moving out because they qualified for a loan and they're going to buy a house. So we are seeing that as well. So that's affecting new home sales. So the market is strengthening, it's getting stronger, and I'm encouraged that despite all of the headwinds that's coming at property owners, that the market in Chicago remains solid. Let me give it back to you, Travis.
Thanks, Tony, for that. So as an investor actually in the market right now, what opportunities can they take advantage of in this market to really force appreciation in their assets? Cody, can you share with us some opportunities that some of these owners can actually take advantage of?
Definitely. So the biggest one right now is going to be the ADU pilot zone here in Chicago. thankfully, Chicago's approved 5 pilot areas, which in which you can apply to have ADUs or additional dwelling units, is what the Chicago's calling them, or accessory dwelling units is how we always refer to them. Which is a great way to add additional sources of revenue to currently standing assets that are 20 years or older. There are some unit count requirements that I'd like to state really quick. So properties with 1 to 4 units, the property owner can add one coach house unit to any property, or 1 conversion unit to properties that are at least 20 years old. For properties with 5 or more units, coach houses are not permitted, but the property owner can create up to 33% more units, but they have to be as conversion units. In regards to another requirement for affordability, properties with 2 or more conversion units, every other unit must be legally restricted affordable at 60% AMI, or area median income. But other than that, it's a fantastic way to force appreciation to currently standing assets, and especially as we venture towards interesting times and out of the pandemic, it's a great way to get next year kicked off, or the next following years, some equity back into the asset.
One of the things I want to add on to Cody's commentary is that a lot of the times, and if it's a 6-unit or a 24-unit apartment building, a lot of the times the additional unit would probably be a garden unit or garden units, and you have to hit the affordability requirements. Typically, garden units rent for less than other units in the community. They're a little bit smaller because they're sharing space with the laundry room or sharing the space with some of the mechanicals. And you typically rent them for less than you do the units that are above grade. So what we found is it ends up being naturally affordable housing anyway, what we call naturally recurring affordable housing anyway. So the affordable requirement may just be a box that you're checking versus a obstacle that you have to overcome. And the reason for this whole thing is because there's a shortage of affordable housing in the city, and there's a shortage of affordable housing throughout the United States.
That's a great point. That's a great point, Tony.
Thanks for sharing that information. If you all would like some additional information regarding those opportunities, please feel free to drop your information down in the chat bubble, and we'll gladly share that information with you. And in regards to those actual pilot zones, such as the ADU pilot zones, do we have any opportunities that we'll be able to share with them today, Mo?
Yes, thank you for that, Travis. Good afternoon, everyone. We're proud to announce 7201 Southwestern. It's a mixed-use 20-unit located in Marquette Park. It's a qualified opportunity zone with 2 retail tenants. It offers positive cash flow, and there's an opportunity for an investor to have some value add as well. We also have 8041 South Manistee. It's an 8-unit apartment building, qualified opportunity zone as well. And it's benefited from many capital improvements over the years, fully occupied, and you can achieve above average returns from day one with the asset. It has some really large bedrooms, 4 bedrooms with 2 baths, 6 of the units. And it's a direct access to Lakeshore Drive. So it's conveniently located and not far from Chicago Rainbow Beach Park. We also have Groveland Park, 623 East Groveland Park. It's a completely renovated 6-unit, all 3-bedroom, 1 baths. And it's an open floor plan with high ceilings and quality finishes located in Bronzeville in a gated community. So it has a unique approach during this current time. You have privacy. There's a front park that you can take advantage of as well with that. Tenants can take advantage of that. And it's also conveniently located and has direct access to the expressways and Lakeshore Drive as well.
Thanks for sharing those opportunities, Mo. Just want to make you all aware of a few upcoming events this week. The MBOA is actually having a webinar on tomorrow's business date at noon, where they'll be discussing the topic of rent control. And of course, every Monday, the Multifamily Investment Advisors team here will be presenting the multifamily market update. And we look forward to seeing you next Monday. Thanks, guys.